starting. Hey, good morning. It's a Monday. Congratulations. This is your opportunity to get up, get the job done. Welcome to QuantBox Live. It's about 3 hours before the open of trading on Wall Street. This is your hour of power where we uncover the best fundamental opportunities, not just economics, but also market sentiment. So, long term and short term forces. Another way of looking at it is the reason for trading. You're not just looking for a pattern, but a confluence of, well, rationale for why investors around the world are putting money towards a particular asset or taking it away from a particular asset. Things like central banks that control the money supply and therefore impact things like inflation through their interest rate policy or through other actions. We like to look at the intrinsic underlying value, the trend. Should the dollar be going up or down? I don't know. Okay. Well, if you look at things like the S&P 500 and gold and yen and dollar and yields and VIX, trading strategies according to logic. Let's get on with it. Oh, looks like you lost me for a second. Mm-hmm. Mm-hmm. Hang on. I think I have to redo the screen share. Uh-huh. That's okay. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Oh, looks like I need to log in. Let's log in. Okay, so I'm in the dashboard. Let's see if I'm in the right profile. Nope, got to change to the right Gmail. There you go. That probably happens to you from time to time. Just switch, make sure you're in the right browser profile. And please, since we are using the Google Cloud, please use Google Chrome to access QuantBox. I use DuckDuckGo. What? Just use Chrome. Okay. Anyways. All right. So markets are not open yet. It's still pretty early in America. It's like I said, just after 6:30. All right. So what's going on? A decent move. That's a good move in regards to yields on Friday. If I recall, on Thursday it was 4.3 and now 4.26. That's a move in the right direction. That is ever so slightly risk on. Maybe not enough to turn the gauge, but maybe we'll take a look at that in a second. Oil coming back down to reality, 76. Okay. A lot of the OPEC cartel are cheating, in particular Iraq and Kazakhstan. Okay, cool. Well, if this is coming down, maybe an opportunity to buy some gold, maybe a little up for gold this week. We'll see. Particular if dollar weakens, if we have some more risk on. Okay, S&P 500 flat. Well, the market's just opening. Okay, euro dollar. What? It's been around this point for 2 weeks, I think. Like, what's euro dollar done for the last 2 weeks? Nothing. Nothing, honey. Okay, and Bitcoin, really, actually, nothing as well. Stable? Stable coin? A stable Bitcoin? Yeah. Well, interesting. I wonder if they're all related, like the fact that Bitcoin isn't 60,000 or 40,000, after the big moves. Why is it so stable? Is it because everything is lacking the underlying trend. Like they're all stable and flat for the same reason. We're all trying to figure out what's going to happen over the next 3 months. No, good talk. Good talk. All right. So what's going on? Nothing. You have a big, fat, giant opportunity to lose money. So, in what you do in this case, since there's no underlying trend, you have to do relative strength exercises. So, like for example, you just sell dollar just because you want to sell dollar, not because you think there's a big global trend that weakens the dollar. No, you do your research, you kind of look around, you look at some of your charts, you're like, yeah, I guess it's weak today, but it's not necessarily going to be weak tomorrow. Or the yens, or you pound looks strong to you today, but it's just pound. It's nothing. There's no other trend that besides pound maybe being strong today. So they're very short term trades. So you're not going to get much more, according to this, you're not going to get much more than day trades. And if you're long today, you might not be long tomorrow. Well, that's not necessarily a trend, is it? So just be careful, pick and choose. You're actually betting on horses right now. I like to bet on all horses. We call that a trend. But in this case, you're picking horses to bet on. And there's no win, place, or show. It's win or go home. Win or the glue factory. Oh, that's horrible. What a horrible thing to say. Yeah. All right. All right. What do we see here? Well, we're trying to combine long term and short term. So you can see there's a lot of things that are bearish, but you wouldn't expect them to be bearish. So, so it's risk off. Well, there's a lot of things that are bullish, and you would expect to be bullish. That's weird. So Swissy yen is way up today. Euro yen is way up today. Pound yen is way up today. The Kiwi yen is down. Kiwis seems to be weak. Look at this. Pound Kiwi up. So Kiwi is weak. Aussie dollar down. Aussie Swissy down. Weak, weak, weak. Okay. Kiwi is weaker than Aussie, but Aussie is weak. Okay. Got it. Stock markets haven't opened quite yet. Okay. Notice all the cross pairs seem to be doing good. Well, I've taught you to look at cross pairs during a period where there's no underlying interesting trend. Okay. So you don't have to trust Uncle Wayne. It's in the QB. You can trust Uncle QB. You don't drink, you don't smoke. He just does analysis. Oh, that crazy Uncle QB. Keep waiting for a new calendar. We're not really going to get one anytime soon. Um, Interesting thing. I wonder if we're going to get changes in case Schiller. And that has to do with home prices. I'm wondering, like, at some point. Um, well, let me back up a little bit. There's two real estate markets in the United States right now. There's existing homes and there's brand new homes. Existing homes, they're not for sale. And even if they were, you wouldn't want to buy one. Prices are high and inventory is low. So what people are actually doing is buying brand new houses. If you have to pay an 8% mortgage, you might as well do it on a new house, not someone's run down, nasty old house from the 80s, right? You know how much it costs to replace the brass hardware in a house? All the hinges and doorknobs. You're like, oh, it's no big deal. We'll fix it up. Do you know how long it takes to change all the hinges in a house? You're like, whoa, just buy the brand new house, man. Ah, that coffee's so good. So, anyways, I'm wondering at some point, is that going to change? And of course, the other underlying thing, and you probably noticed this in the Fed meeting minutes, which I'm going to cover tomorrow at Investor Bootcamp, but commercial real estate, I guess, would be the third market of this, but that wouldn't be covered in Case Shiller. So I wonder if home prices are going to start adjusting as interest rates come down and inventory comes back. So you can't sell your house, your existing house, if you have a 3% mortgage and you sold it and then bought a new house that comes with an 8% mortgage, you couldn't afford your own house. So very few people are selling their house. But anyway, so that might be interesting. We have a New Zealand interest rate decision later this week. Oh, here it is, medium. Oh, isn't that interesting? Medium. Yeah, medium. I normally would have that marked as high, but QuantBox has it medium. The reason I bring that up is I'm developing AI that does technical analysis called TRADARS.co. And it looked at the RBNZ interest rate decision and said, don't worry about it. You're like, what do you mean, don't worry about it? It's a central bank interest rate decision and monetary policy announcement. And it's like, yeah, I know that, but I can't find a pattern. So that's interesting that QuantBox has it medium and not high. Interesting, right? In the press conference. But put that on your radar. Now, okay, put that on your radar. Non-farm payrolls is the big one, of course. Cool. So there's just a lot going on here. All right, a lot going on here. I don't like this calendar and I don't want to look at it anymore. They're supposed to be developing a new one, but let's see. Let's do a COT report. It's not this Friday? I had it on my brain for this Friday. Huh. Yeah. All right. Guess that's good. Sweet. Good. All right. Still a lot of interest in owning gold, silver, and platinum. Rand, by the way, I used to just call gold, which is kind of interesting. I haven't done that in a long time, just because their percentage of GDP is heavily impacted by gold. Same thing with Australia. Turns out you can choose. What could you get for $2,000? A giant hill of coal, right? Or an ounce of gold, right? So, anyways, there's a big difference. So, gold can have a big impact on GDP, per unit, definitely. But money went into these metals. It's kind of interesting. So, like I said earlier, I might be into buying some gold for the first time in a long time. Part of it is look at how many bears have left the market. It's important to know that. Why is it going up? Why is it going down? Okay. Okay. Why is it going up? Why is it going down? Well, we lost some bulls, but maybe this week we can get some more. The thing is, the bears left. Oh, there's less people pushing down. Maybe it's seasonality or something. Maybe it's just a normal thing. But nonetheless, these metals have attracted a bid. Well, actually, I should take that back. Let me take it back. Like gold didn't catch a bid. There's just less bears. Okay. Opposite. Yen's still very, very, very weak. Money coming out of NASDAQ. We're at a top. Less bulls, more bears. Yen's weak. Less bulls, more bears. That's good. So yesterday in the day trading group, we basically isolated yens. They're like, yeah, well, let's buy some yens. Let's push them up. Let's push them up a bit. Okay. Some more bulls on Swissy. That's or more bears, I should say. Okay. Some shorting on the Dow. Okay. Well, the Dow's way over here, right? So it's moving back to the right. No, that's interesting. So I look at this. So we get emails about the commitment changes on the commitment of traders report for those that signed up for the AI alert service, which is an upgrade to your QuantBox membership. Today is supposed to be a major breakthrough development meeting. If it's not going to be today, it'll be tomorrow. But major breakthrough in the development. So literally now it is reading the report throughout the day, not just this report. That the COT will be a separate report. But what we're doing now is twice a day, it's going to look at the market and write a report for you, one pre London, one pre New York. Okay. And that'll be an email. And then the next thing that it's also should be done today is it'll write the text email to say something important has changed and I need to tell you now. And so if that is indeed, if we have crossed the line there and got to the other side, then the next is hooking up the phone numbers. I mean, and that should be days, not months. So very cool. Can't promise you anything because I'm relying on them. But that's what I've been told, only for the 14th time. But the 15th time, it will work. Okay. So, anyways, looking forward to that. Cool. I need to unlock some of these. So we could look at something. Let's look at a yen. Okay. So the blue is the 20-year average for euro yen. And January to February. Okay. It was okay. Okay. About the same, just at a different level. A little more positive, but the slope is about the same. But notice that this asset typically has a few more months of up. What do you think? Is that good to know? Yeah. Well, the big sales pitch for QuantBox is the confidence to let your winners run. Where you're like, oh, well, if you're in this, it could last a while, according to the 20-year average and the 5-year average. Hmm, cool. So 60% of institutional investors are long euro and 76.5% are short yen. So yeah, this is structured just right. Seems pretty logical. Now, there's lots of concerns, of course. In particular, it has to do with USD yen in that 151, 152 zone. That's terrifying. But one of the things we've been working on at the day trading group is that there's lots of things to be concerned about, but it's still up, right? That's the hard thing, to turn your emotions off. But you shouldn't be a bear because you're afraid it's going to turn bearish. Okay. You stay in your foxhole. Keep firing your weapon. So, anyways, we could take a look at that. it seems to be a decent trade. Yen is still fairly weak, and euro is having a recovery. Cool. We go to the yens. And this is from the day trading group yesterday, and we've now completed. Look at this. It's not even 7 o'clock in the morning, and we're done for the day as a day trader. Okay. So now we have to plan out tomorrow. What do you think? If that also is the trap and break strategy that I outlined several times last week, where you trap it in a box and then you catch the pullback. Okay. Now, it would be great if I had the courage to let it run. Swing trading gets you to 164. We go back to the month. Remember, all this started way back here. Okay, let me get, okay, way, all the way back 2 weeks ago. I laugh because, some investors are in for 5 to 10 years, right? And 2 weeks seems like a long time. You're like, 2 weeks, right? But anywho, double bottom. What's the target based on this chart? Anybody? Bueller. Bueller. Oop. Don't press that button. $165.44. Perfect. Yep. Yeah, a lot of R2 is acceptable too. Yeah. Yeah. No, he's right. Yeah. I mean, just amazing, right? 165.44. So yeah, I gotta let it run. Is it gonna happen this week? The chart says no, not probable. I mean, it could, but we're trying to read our chart. We'd have to have an explosive week to do it this week. We'd get to 165.71, but I'd be out by then, right? So let's clear that out. So more likely we do this. So my big decision of the week would be, do I take profit there? Because the risk is if it comes all the way back this low, then I lose the short-term trade. Now, if I was in one of these, because these are all sort of the straightforward trades, I wouldn't have to worry about it. But I'd have to have the confidence to say, oh, this is going to go up a lot. Okay. In fact, and I don't want to change this. Well, I guess we can change this. Let's change this to the annual and see if it tells us anything. It's a weird out of position trade actually. So I suppose we got to mark this as a significant level, huh? Is that our target? That is our target, isn't it? Uh-oh, SpaghettiOs. Yeah, got to worry about that. particular, I look at that and it seems to me USD yen will be hitting something important like 151 or 152. At the exact same moment we're touching that. So, anyways, there you go. This one is difficult to give a target because it's out of position. Okay. Normally, when you're out of position, you simply ride the 4 hour 21, but you're typically not that far out of position, in particular in annual pivots. So the way that I think of this is that these annual pivots aren't actually the reason it's trading. That the euro and the yen are doing completely different independent things. So that's why I have a euro index and a yen index, because when you put the general euro strength or weakness and the general yen strength and weakness together, well, this asset will be going up or down. But it's possible very few market participants are actually trading euro yen. We're just observing the two mixed together. The year before, oh yeah, faux show. But now we're just sort of out of position, kicking off of a 200 EMA. I'm like, I'm not sure what to make out of it. If it was a smaller time frame than annual, I would say we're going to hit 173.43 early in the period. So let's say April, we're up at 174. And then what? Collapse. If I throw in some seasonality, I think it's closer to June, July. So that would be the second half of the year. You would get this pullback and like that. And I'm like, oh, well, maybe, huh? Maybe, 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 baby. So all the ends seem to be going up. Cool. And that's the only thing we could really find. I caught the Swissy as well. I'll move my stop to break even. And all right, what do we got here? Do 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 do. How does that seem? Dun, 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 dun. Swissy's not even particularly strong today. It's just the yen doing the yen thing. That's why when we do have underlying intrinsic trends going on, my modus operandi is like be long all yens. Remember I said earlier I like to bet on all horses? Maybe I said it yesterday. I don't know. It's all a blur. It's all a blur. Anyways, let's start again. I like to bet on all the horses. That means long all yens at the same time. Why is that? Because I'm actually reducing my risk. Because in trading, not only do you have to get yen weakness correct, you got to buy the right asset. And so, when you buy a pound, euro moves better. So then you buy euro, and then Swissy moves better. And you're like, what? So then you buy Swissy, then CAD moves. So then you end up buying CAD, nope, pound now. And you're like, whoa, whoa, whoa. You're never quite you're taking the same amount of risk with, say, one standard lot, but you're never quite getting the best performer. You're always getting decent results because you got the one thing right. Yen is weak. But you keep betting on the wrong horse. So instead of one standard lot on one yen, Why don't you have 10 mini lots and buy all the yens? Bet on all the horses. Because now what have you done? The bet is one thing, not who's going to win, just that yen is going to lose. Okay. It's half the bet. Okay. I don't know. Is there a roulette example? You're betting on black, not black 16. Like the odds of you hitting black 16 is pretty low. And if you know roulette, you're probably thinking, no, it's red 16. So you're never going to win. All right. I don't gamble that much. Anyways. Yeah, I was on an airplane last weekend and they had roulette. So I was playing roulette. I bet on 0 and 0 0. I did all right, actually. Don't you just love it when you're flying on an airplane and someone's doing this to the back of your seat? Right? And you see it's some 90-year-old guy who hits a screen like this. Boom. Boom. Like, come on, Grandpa. Come on. Just touch it. Just touch it. Just poke. No. Yeah. Yeah. Anywho, not that it's happened to me. Not that it's happened to me. So, anyways, life is great. Life is good. Life is beautiful. We're going to have a great trading week. Lots of stuff going on. Apparently, not non-farm payrolls this Friday. Sweet. For some reason, I had it on my mind. Right? My mind on my money and my money on my mind. Cool. So, and lots of interesting things being developed and should be rolling out soon. So I'm very excited about that as well. So I'll see you out throughout the trading week, whether it's QuantBox, Investor Boot Camp, so on and so forth. I'll see you real soon. Maybe Forex today. Peace on earth. May the pips be with you. May your profits be above average. Cheers.